A monetary policy news that could have major implications for real estate, borrowing, and the broader economy as a whole. The Federal Reserve Governor Christopher Waller is once again urging for a rate cut at the upcoming July FOMC meeting. Now, speaking at the Federal Reserve Bank of Dallas, Waller made it clear that his push for cuts is rooted in economics and not politics. He emphasized that interest rates remain too restrictive even as inflation pressures ease, saying, "I'm kind of in the minority on this, but I've tried to lay out very clear in economic terms why we could do this. It's not political." Now, this position, it's not anything new for Waller. He's been signaling since late last year that the Fed should consider easing policy if inflation continues to trend downward. But many of his fellow policymakers remain cautious. Fed Chair Jerome Powell has maintained that any action must be driven strictly by data, not political pressure, especially in an election year. He recently reiterated that the Fed isn't ready to commit to cuts just yet, as inflation, while improving, hasn't fully reached the 2% target. Now, one factor complicating the decision is the uncertainty around tariffs. Now, President Trump has extended a pause on his proposed tariffs until August 1st, but he's also threatening new duties, including a 35% tariff on Canadian goods and a 50% tariff on copper imports. Now, Waller acknowledged these risks, noting that tariffs could drive prices up again, but argued that the current interest rate level is still doing more harm than good by unnecessarily restricting growth. Meanwhile, the political pressure is intensifying. The Federal Housing Finance Agency Director Bill Pulte had publicly said he encouraged by reports that Powell may consider stepping down. Now, though Powell has insisted he intends to finish his term, and Office of Management and Budget Director Russell Vought has gone after Powell personally, raising questions about the cost of renovations at the Fed's DC headquarters. Now, this is all going crazy, and I've been saying this for months now. We need to lower the rate. Now, the Fed's most recent meeting minutes released on July 9th show that only a few members are currently in favor of a July rate cut, with most leaning towards a wait-and-see approach. Still, market watchers are closely tracking the Fed's every signal. Now, current market pricing suggests a rate cut in September is more likely, but a July move is still on the table, especially if inflation data continues to improve or the economic outlook weakens further. Now, at the heart of this debate is a fundamental question. Is the Fed holding rates too high for too long? I believe that they are. A cut could prove and provide relief for borrowers, real estate markets, and consumers, but it could also open the door to renewed inflation, especially if tariff-driven prices take hold.